Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, March 6, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So as you well know, and many of our listeners do as well, the BOJ is meeting this week, and Governor Kuroda will helm the BOJ meeting one last time. So why don't we open the episode with what you expect when the BOJ announces the results from the meeting this Friday, March 10th, in local hours?
Okay. The Bank of Japan's March Monetary Policy Board meeting is drawing near. This will be the last meeting chaired by outgoing Governor Haruhiko Kuroda. In March, the new deputy governors will take their seats. Then the governor's term ends in April. The new leadership is expected to be approved by the Diet around March 9th to 10th, just when the BOJ meets. The BOJ will hold this month's Monetary Policy Board meeting, and we expect it to keep the monetary policy unchanged with a policy rate around minus 0.1% and the target level for the 10-year JGB yield around 0% with a range of 50 basis points. Our sub-scenario with around 40% probability is that the BOJ eliminates the target range for yield curve control operations. We say this because the JGB yield curve is still skewed, even after the BOJ began expanding the target range for yield curve control operations following the December meeting.
Okay, that's pretty interesting. Pretty interesting sub-scenario. Perhaps we can come back to that a little bit later in the episode. But sticking to the BOJ, let's talk a little bit about that nomination process. That's taken a little longer than expected, I believe. But please confirm. So let's talk about that a little bit, as well as other political consideration, including those that could influence current BOJ leadership.
The Diet hearings for the new BOJ leadership nominees now over. The current deputy governors will leave office on March 19th, while the last day for the governor Haruhiko Kuroda will be April 8th. There isn't much time left in the terms of the current deputy governors. Diet approval of the BOJ nominees is only a waiting game at this point, given the uncertainty. On February 28th, the government's fiscal year 23 budget passed through the lower house and will be approved by the end of this fiscal year. Over the near term, political maneuvering within a ruling LDP party will pick up out of the unified local elections in April. There is still a chance that outgoing BOJ Governor Kuroda will spring a surprise at his final Monetary Policy Board meeting this month, depending on which he considers most important. Firstly, measures to mitigate inflationary pressures in line with Prime Minister Fumio Kishida's new style of capitalism, or secondly, sustaining Abenomics.
And there's the rub. Those things are really diametrically opposed at this point, which we saw play out in spectacular fashion after the December BOJ meeting. I will reiterate the point that you said the approval of the nominees is only a waiting game at this point. Presumably, I think what you're kind of referring to is the fact that the nomination process took perhaps longer than expected. But that also means that the actual confirmation process will be smooth, given presumably all the political considerations of among the LDP factions was considered in the nomination process. But let's talk a little bit more about this sub-scenario, which, to be honest, seems a little crazy. I know that's a bit of a strong statement, but I mean, making a G7 central bank making a major policy decision with the current governor on his way out the door. Talk us through that a little bit.
Okay. The JGB yield curve remains skewed, especially around the 10-year tenor. While 10-year JGB yield level has changed since December 20th, the JGB yield curve shape has not changed noticeably. We think the pooled collateral fund supply operations have only made the BOJ's yield curve control operations more complicated. While making a big policy change at the final monetary policy board meeting would be unprecedented, we are warning that based on the rationale behind the December supplies decision to improve the market functioning, there is still room for Governor Kuroda to change the range for yield curve control operations this month. The issues of raising taxes and or changing the framework for issuing the JGBs to cover social welfare and self-defense force policy expenditures have also been brewing within a ruling LDP party. There is a speculation within the market that, while extraordinary, the BOJ may alter policy this month because of these political pressures. And we are watching the following possibility as a sub-side scenario as Governor Kuroda passes the baton of policy management to his successor. In our main scenario, Kuroda may leave it entirely to his successor to assess and or revise monetary easing and amend the increasing complex framework of the yield curve control operation range and the JGB buying plans. And in our sub-side scenario, Kuroda keeps the policy rate at minus 0.10% and the target level for the 10-year JGB yield of around 0%, stays the course on monetary policy and continue expanding the monetary base and focus on revising or eliminating the range for yield curve control operations. Under sub-scenario, the pricing action in terms of the JGB yield curve rise and yen strengthening will be considerable, as in December, following the BOJ supplies decision.
Okay, I mean, that's an interesting point. You know, the rationale that the Kuroda used when they widened the bands in December was that the dislocations and the lack of functioning and the desire to improve market functioning in the JGB market, and that really kind of has been, you know, that's sort of been anything but since there. You know, and you also, you know, highlight that either, you know, each scenario that you lay out, you know, it's not that great, right? The current framework is overly complex, and that's going to be very complicated for the new governor to unwind. But ripping the Band-Aid off could present other problems, you know, as the new governor walks in the door. So neither one of those options sound particularly attractive to me. But you know, we've discussed that enough. So let's move on. Why don't we wrap things up with your outlook across some markets? You know, yen rate, spot dollar yen, and yen basis.
Yen has stopped rising. The U.S. job figures and Europe goods orders will test that those tested the pricing action and market speculations that the BOJ will make changes to monetary easing have lessened ahead of the March 9th to 10th monetary policy board meeting. We see the dollar yen pricing to be slightly neutral. We keep the dollar yen to trade in a 3 yen range between 134.50 to 137.50 now with a neutral rather than a bullish bias. The yen swap rate curves continue to flatten over the near term, while our main scenario is that the BOJ stays the course at its March meeting. The JGB yield curve remains skewed considerably, and we still see a 40% probability of the BOJ eliminating the target range for yield curve control operations in a supplies move, as discussed. A 30-year JGB auction is scheduled for March 7th. There is still steepening pressure on the JGB yield curve. We maintain our view of yen rising and rate rising and a steepening bias persisting. The yen basis curve has widened somewhat. Ministry of Finance weekly securities poll data shows that the Japanese investors unloaded a net 332 billion yen of overseas securities in the week of February 19th to 25th. This included net buying by 211 billion yen of medium to long-term foreign bonds, the fourth straight week of net buying, and a fifth straight week of net selling of foreign stocks and investment bond holdings by 440 billion yen. Japanese investors continue to rebuild their foreign bond positions. Over the same period, foreigners unloaded a net 628 billion yen of Japanese securities, including Japanese stocks and investment fund holdings by 403 billion yen, medium to long-term yen bonds by 208 billion yen, and short-term yen bonds by 16 billion yen. Foreigners have not scaled back their TDBs, but have cut and redeemed their medium to long-term yen bonds, while at the same time, the Japanese investors continue to rebuild their holdings of medium to long-term foreign bonds slowly. Yen basis will likely shift from widening to neutral as Japanese investors buying foreign bond flows are slowing down seemingly out of the BOJ's March meeting.
Okay. All right. So you are neutral on dollar yen from your bullish bias previously. Your view on the JGB yield curve, continues to be, negative with a steepening bias, which makes sense for a lot of the a lot of the reasons you already mentioned. And you're now neutral on basis after having a widening bias as the Japanese investor purchases of foreign bonds winds down, which makes sense. It was quite the streak. I think they bought something like $35 billion US dollars worth of foreign bonds over the last 4 weeks. So that obviously can't last for forever. Does that sound about right, Sekido-san?
Right. Thank you.
Great. Yeah, of course. Well, great stuff as always. Thanks for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.